guys, welcome back with me. Don't forget to like, comment, share, and subscribe. Eurozone inflation hits record high 10%, raising fears on ECB. Frankfurt Reuters Eurozone inflation zone pass forecast to hit 10.0% in September in a new record high that will reinforce expectation for another jumbo interest rate hike next month from the European Central Bank. Price growth in the 19 countries sharing the euro accelerated from August 9.1%. Data from Eurostat showed on Friday, beating expectation for a reading of 9.7%, with some Eurozone members experiencing the fastest price growth since the time of the Korean War 70 years ago. Inflation was still driven mainly by volatile energy and food prices, but continued to broaden out, with virtually all categories from service to industrial goods now showing painfully high readings. That's likely to make uncomfortable reading for the ECB, which targets price growth of 2%, as it suggests that inflation is increasingly being fueled by excess demand and it at risk of becoming interest rate. The September reading of our inflation is ugly across the board, with all broad categories experiencing accelerating inflation. ING economist Bert Contagion said this seals the deal of another 75 basis points hike from the European Central Bank in October. Underlying inflation, which filters out volatile food and fuel prices and is closely watched by the ECB, also jumped to fresh height, adding to the urgency for more rate hikes after oversized moves in July and September. Excluding food and fuel prices, inflation jumped to 6.1% from 5.5%, while an even narrower measures, which also includes alcohol and tobacco, rose to 4.8% from 4.3%. Energy prices were meanwhile up 41% compared to a year ago, and processed food was up 13%, while the ECB's next rate meeting is still almost a month away. A host of policymakers have already made the case for another 75 basis point rate hikes on October 27 after a combined 125 basis points of moves in two meetings. The ECB fast pace of policy tightening on record. Markets now see the 0.75% deposit rate rising to around 2% by the end of the year, then to around 3% next spring before leveling off. Headline inflation is in double digits, and an increasingly alarming surge in core rates leaves the ECB no option other than to continue to jack up policy rates despite the dear economic outlook. Can what read at S&P Global NYSE SPGI Market Intelligence said the ECB cannot afford to disappoint. A key problem that an inflation peak predicted many times by the ECB could still be months away, as household energy contracts, other spices, and sky high gas prices filter through. Euro, euro to decade low against the dollar will raise importing inflation, particularly since the bloc's energy bill is mostly denominated in dollars, but price pressures may be tamed by a looming recession, expensive energy and projected gas storage are the rainy saving and are likely to eat deep into growth as consumers will have little spare cash left. The European Systemic Risk Board, the United Union Financial Risk Watchdog, were on Thursday of a perfect storm that could challenge financial stability as business and households yet to recover from the pandemic now face a fresh hit. I think that's all from me. Don't forget to like, comment, share, and subscribe this channel. Bye.